would now like to invite Mr. Naveen Joshi to speak on insights leading the evolution of health benefits.
Working right? Okay. Thank you. Thank you. Hello, everyone. Uh, Good morning. I see all dull faces. Hopefully, this presentation will make you cheer up a little bit. Okay. Uh, the presentation is on health, as you know. Uh, what I try to do with every presentation is give something back to the industry. And at least there is some learning for both sides. And maybe raise some key questions. What, as an industry, we can do more as such. Uh, if I think of my journey, I think health as giving something back to the society back. And in everything what I do on health side, on insurance side, I think of that as giving something back. So this is one way of my giving back to the society, to the industry. So let's dive in. So the way I'll do it is I'll see a quick overview of the UAE insurance industry, very quick because we have heard already a lot so far. Then maybe a bit on the benchmarking, the data that we have, what insights does this bring out, is it really helpful, and then what are the trend, what is the medical trend in the industry, and what is the effect of substandard life, if I may call that, or unhealthy lives into the portfolio. And in the end, a little bit on the PI new benefit plans experience, because that is something a hot topic, and there is even an email from DHA, so that is a hot topic, but very quick on that. So I think, let me start without further delay. So the insurance industry has been growing a lot in the recent past. All of us know that. It's growing at about 22% in the very recent numbers we saw. And for the health side and for the GWP of the overall industry, 16% since 2022. And if you look at the last 8 years, first 4 years were pretty dull, and there was COVID year in between, and then after that just picked up. So if we think of the reasons of going, the rate, of course we saw the economic growth rate, the people coming in, the rising population, H&W population coming in. There's a mandatory insurance, including the Northern Emirates plans, which led to. And there's a rising healthcare cost and lifestyle diseases, which leads to a lot of problems. And because of that, premiums rise, which is what we call a trend. And obviously, the reinsurance support has been growing in the region. However, if I look at overall market size, how does it split up? You look at health, which almost half of it. Then is the motor side. And then individual and group life, which interestingly was about 20% near the COVID years, and now it's about 12% roughly. Then property and fire, miscellaneous, engineering, and so forth. So I think what we can easily say that health is the most important LOB here. We can't ignore it, right? Then how about loss ratios? Are they good or bad? So in this graph, what I'm showing is health, motor, fire. I excluded life from here, just for the sake of it. And so health has been around 80% roughly, rotating nearby plus minus a few percentage points. Motor was lower, 49, and then went to slightly above 100. And then fire, which you saw was about last year 199, pure losses, pure claims. However, does it really transform onto combined ratio or profitable combined ratio, let's say? So if I look at the combined loss ratios, look at the health side, still around 100, but less than 100. But the other ones, motor, fire, even life for that matter, the CBU reports were showing higher than 100% loss ratio. So of the top four, consistently health has been less than 100% combined ratio. At a 50% market share of the premiums and a less than 100% combined ratio, I think there is no brainer that we should look at it in more detail and maybe think what we can do further from here. So similar to the overall industry, health has also been doing quite good, and similar reasons actually. So mandatory insurance regulations, expanding population workforce, rising healthcare cost, and increasing health awareness. Of course, Takaful has also been growing quite good in the recent past. And a quick one, if you see because we've been talking about the regulations, so this is one of the plans which recently came out on the Northern Emirates side, which had a premium of 320. Now, 320 on Dubai side looks quite, lower side, but on the Sharjah side and Northern Emirates, maybe this is reasonably doing. It's a fairly restrictive plan. Nobody disagrees that we can offer better, but the price will also be better in that case. So I think these are the main highlights. I'll not go into much detail but the idea is that there are things happening which are leading to increase in premiums, and we'll discuss something about it. So I kept it just there for now. Okay, on the benchmarking side. So loss ratios. Firstly, just to think, when I say benchmarking, this is BADRI's own data, right? So does it really help? If I say something from here, does it matter for the entire industry? So for that, we compared the loss ratios. So if you look at 2022, 84, 83, 23 slightly different, 89, 86, and 24, 79, 82. So directionally, even our portfolio, the one that we are looking out here, and the CBUE, they are moving in the same direction. So at least we can say directionally what we find out from the data, that should be relevant for the entire industry in general, right? Numbers may be slightly up and down, plus and minus, but directionally it should be there. And we have some confidence that the data that we are using here has some correlation with the industry, and it is consistent at least in terms of direction, right? So having said that, the exposure increased a lot between 22 and 24. A lot more lives were covered by health insurance than what the premium number shows. And the reason for that is, now if we just understand this slide, I'm dividing all the industry into 7 tiers, and which is by premium, okay? So just to, as a parameter, take a premium, and premium also will reflect the kind of network they use. So the tier 1 is the best of the network, the higher network. Tier 7 is the lower network. Now tier 7 is less than 500. So all the Northern Emirate plans come in that one. Tier 6 is 500 to 750, which is the PI plan should come in, most of them should come in that one, aside from very few. And tier 4 and so forth. Tier 4 is 750 to 1000, and then 1000 to 1500 and so on. So basically 6 tiers where we think our business is there. So clearly you can see the pie of tier 1 is reducing from 20% to 11% now. And the tier 6, which was 2% there on top, is now 18%. So we see that bottom pie increasing. And the reasons are fairly obvious. We all know companies may be cutting down on budgets, hence the lower spend. Insurers are unable to increase the premium as much as they should due to the competition. And there is a high demand for lower products with lower coverage. And this is because the workforce is increasing faster. Maybe the companies need to control their budgets in the short run. So possibly that is also leading here. Nobody can say for sure, but this is what, when we discuss with the industry, with the brokers, this is what comes out, that these are the possible reasons here. And lower network tiers have a much better loss ratio. This is also very obvious, right? So the premium, if you look at average premium across all the years, and these again by the same tiers, the average premium decreases, which we all know should, but the loss ratio is also slightly decreasing trend here. And the reasons are fairly obvious again, because the plans become more and more restrictive in there. They are making hard for people to claim, right? In some cases, there are other stories heard which are not so ethical, but that's how it is. So what can insurers do here? They can target various segments based on their risk appetite, their expertise, right? You can play to your strengths, like expertise I was saying. So maybe some companies, I've heard this, and when I talk to people or companies around, we are better in this tier, but not in this tier. For some reason, some tier works better for some company, some tier work for others. However, tier 1 obviously accounts for about 45 to 50% of the premium. So that one always will have intense competition. Now that, and the tier 2 will always have the next level of competition. So tier 4, 5, 6, the competition, the shifts towards that side where they have more chance of winning because the SME population or the any plans or these kind of plans are higher, number of people are higher, so they can get some share of pie, but still what is happening is profitable. So that's the, and I have a quick question on the Menti side after this one. So slightly fun question, what is the proportion of obese population in UAE? And I'll link it back to the presentation, but let's just take. Are you showing? Okay. This is for all of us, okay? If no idea of portfolio, maybe think of UAE population in general. What do you think is the proportion of obese population? Menti is not coming? Menti? Okay, some mighty issue. But we can have the answers just like that as well. What do you think? We know the answers 0 to 10, 10 to 20, 20 to 30, 30 to 40, 40 to 50, greater than 50. What do you think is the proportion of obese population? So obese by I mean BMI greater than 30. There is a range like 25 to 30, which I fall in, slightly overweight. Yeah, it's working now, okay. We can start showing the results, I think. More than 50. Okay. 20 to 30 says majority of the population, and 10 to 20, 30 to 40. Okay, let's answer it later on. Maybe the next question, we have 3 questions in a row, so, and then we can start. The next question, moving on. Yeah. No, no. Next question. Yeah. What is the proportion of people who do not exercise enough in UAE? Okay. So think of your office, think of yourself. We did this poll in our office. There were 6 people. Only one of them was exercising. So that's a hint. But so how many people don't exercise enough? They should. How much they should? Okay, greater than the 50. So there's an answer. Fine. Let's move on. Let's see the next one. Okay, what is the proportion of people who are sicker than usual in your portfolio? Generally, if you think of any portfolio, if you are from a reinsurer or another, maybe think of or a broker, you can think of UAE as a portfolio, UAE industry. Okay, something like 20 to 30 and 30 to 40, those are 2 major ones. So okay, I think we have the idea, we'll go to slide. So we saw 3 things here. How much of the population is obese, how much of people don't exercise enough, and you can see where it's leading to, right? So obviously if you don't do those 2 enough, you are more sick, right? If you are more obese, or then you have more. Let's see what the answers are. So let me just go through. Yep. So according to a study, UAE tops the people who don't exercise enough. The real number is 66% according to this study. In fact, from the GCC countries, 4 out of top 10 countries are in this list. And I'm from India, so I used to think Indians used to be the one, because even if you have to go to a market which is like half a kilometer, we just take out a car or a bike, right? So I thought we should be there, but interestingly enough, it's not. Okay, so 4 out of top 10, which people don't exercise enough. Then let's see the next one. MENA region has the highest prevalence of diabetes, about 17%. So if you look at obesity in UAE, that's 27% or almost 28%. And diabetes prevalence, and this number ranges from study to study which sees, but the variety of studies which I saw ranges from 10 to 30% roughly. So this is somewhere in between 20%. I'll show you numbers from our benchmarking as well, what it comes out to be. But this is a very high level number. And if you think of, now that we know people are more sicker, so 5 out of 10 countries are from GCC having highest average years of disability, as in people are sick for that number of years. So if you look at those slides, so UAE is there right there on the 6th number, 15. So 15 and a half years roughly in UAE, people spend sick during their entire lifetime. And that is the expectation at birth. So, and if you tag it along with from the health insurance side, almost 40% of 40 to 50% of the cost comes in the last 4-5 years of a person's lifetime. Now, this is not a problem here in the region because most of the people are working population, they are expats. But the problem here is bigger. It will grow. It is growing into a problem which we should foresee. So, now, a substantial portion of the population is substandard lives or unhealthy lives. Let's not call substandard, unhealthy lives, right? People like me, I'm also unhealthy, like I have a higher BMI. But the cost of these people on an average is 3 to 4 times higher than a normal healthy person. And this is what I study, which we did on our benchmark data we have. We did a very cursory exercise. We didn't go very deep into it. If we go deep, this might even go higher. But it's, so the prevalence rates, if you think of diabetes or these 5-6 conditions on the top, are diabetes, fatty liver, kidney disease, malignant, which is cancer cases, hypertension. You see all of them are roughly around 5% or 10%, each of them, roughly. And then if you see what is the proportion of claims, that is even higher. Now if I just go ahead a bit, so these two are the ones, diabetes and hypertension, which have the highest proportion of claims in this region. But this leads to me a very big surprise because I've been working in Asia region for quite some time now. For me, heart diseases, cancer, they form the bigger problems there. They are always the top. Cardiovascular is always on the top. Cancer is the second one. Diabetes and hypertension are comorbidities, but they don't cause as much of a cost. So I went into thinking why. So the reason is, A, the coverage there is mostly IP in patient. So these two diseases, heart disease and cancer cases, tend to be higher cost and they are associated more with IP. Diabetes and hypertension need more of medical management. They are more IP sort of things, which is why the cost here is higher. Now why this should worry us, right? We saw obese population, we saw people who don't exercise enough, and we saw diabetes there, right? And hypertension, these two comorbidities along. In fact, there is about 22% of the population which has more than one morbidity of one of them, more than one of these conditions or diseases. So there is a big alarming situation. Maybe we need to think about it more. Now tying all this back to the claims cost. When I see the burning cost or the pure claims cost, I see the negative here. The overall part, if you see, now the blue one is the growth in premium. The golden bar, the yellow bar is the year-on-year change in burning cost, average burning cost across 2 years, which I see, 22 to 24, right? So the claim cost is dropping much more than if you see. Now the reason for this is very peculiar. I've seen this thing for quite some time and people always question me, see my portfolio, there is no trend. In fact, there is a negative trend, right? And this is what this graph shows. It's a negative trend, yes. However, the mix of underlying business is changing. That is something what we don't take into account, and which is why when we see this thing, oh, it's a negative trend. No. When you project forward, you have to think, what is the business going to look like? So some of the factors which can be studied are, how is the movement of business between the plans, lower coverage or restricted plans, or what kind of plans, or even gender mix, nationality mix for that matter. It matters a lot. The claims when you do a GLM, age, gender, nationality, these form a lot of, they throw a lot of surprises as well as a different set of relativities. Change in claim pattern over the years. Now, this is interesting because this gets hidden. Uh, for example, I think, let's say an eye surgery. Lot, let's say about 5 years back, there was a lot of manual and very less of laser surgeries. Let's say 20%. Now it's about 80% laser. The cost changes, right? Those things get hidden inside. You don't think. We think that it's because the mix of surgeries, you won't have laser surgery or a cataract very often, right? You might have once in 3 years, 4 years, 5 years. So those things tend to show up later. So you, depending on how your claims mix is, so you have to see. And influx of new lives. On an average, a new life should be much better in health than the older one, right? And because you have a lot of expat population here, people move out a lot. And if they are sicker and with some of those comorbidities or morbidities which we saw earlier, they have to move out because they can't work. With a fatty liver, it's very difficult to work, especially if you are talking of a population which is a lot in the lower segment of the lower tiers that we were looking at. Yeah, so then any questions so far, or am I boring, or? Okay, so yeah, this almost is the end here, so we can take questions if you have any after this one. So this is what I was showing. Because this is a PI benefit, participating insurer. So these were the 7 benefits which came up very recently, and we also did price for it, right? We had a range of min-max price, and what we were thinking is that there is a possibility of use, abuse, overuse, what do you want to call it. And these 3 were the ones we thought we could be using. There could be a lot more overuse or abuse of these benefits. So now the question is, what do you think? Is there chance of abuse here or not? I have 2 Menti questions and then we can just quickly answer them. Okay, fair enough, too early to comment. Resounding majority here, so yeah, next one. So should we reduce the burning cost, thinking that there is, I mean, the answer was obvious from the last one, so this should also not. So we have a smart population. Yeah, okay, I think we all agree that there is too early to comment. There is, the benefits have been introduced fairly recently. The sales started happening 1st of Jan. So on an average, 4-5 months of experience maximum, right? So it's very early to comment whether the benefits will yield some cost or not. However, some of these benefits will take some time, like for example, dialysis or mental health, for example, even pharmacy for that matter. The limit is increased, but it will only show up towards the end of the coverage, right? So it's too early to say as of now whether those things will have something or not. But the initial indicators have been that there is a very low cost. But these are more from a perspective of how good you control, how good of control you have on these benefits rather than, what is the actual cost of these things. Okay, so I think this brings me to the end of the conversation. Any questions? I'm happy to take it now or outside, or yes, please. Do you have a mic? Thank you, Mirza.
Yeah. Hi. I work at a health insurance company, and as you showed on a slide.
Can you jack up the volume? One second, volume is low. Can you jack up the volume? Mic more to low.
Okay.
Yeah.
A decrease in burning costs can be seen, and I've in my own portfolio, I've often observed a decrease in burning costs. But my question is, when we look at medical trend surveys published by, say, Aon or Willis, they always have very high numbers as opposed to what our own experience says. So what's the reason for that? Are the metrics used, are they different, or why is there such a big discrepancy?
So if I give you a one-line answer, I also believe that the trend should be higher, 6 to 10%. Those are numbers are just misleading. It's the way the portfolio has been shaping up over the last few years. So if there are rapid changes in a portfolio, it tends to show those kind of things, especially when the portfolio here is moving to a lower spectrum of the coverage. It tends to show, and this is not the first time I'm seeing this. It happens. So if you have a more fresh population, more new business, tends to show like this. If you have a coverage shifting to the lower tiers, tends to show like this. So you have to take some sort of stable portfolio in between, which gives you the cost for your kind of benefits, your kind of population, your kind of age, gender mix, and nationality mix. Yeah, please.
Hello, my name is Ihab Alami. Most of the IPMI products in UAE are fronted.
From?
Are fronted. Means they're fronted by local insurance companies. Do you have a split of the volume of the IPMI product in the UAE market in terms of top line and bottom line? Does this data exist anywhere?
IPMI, I don't have the specific split here. And we don't actually, because it's a niche market usually. I mean, interestingly enough, I've worked on a lot of IPMI products in my past life, I mean, as in the Asia experience. Here, I didn't get a chance to much work, but I have done a lot of work on those. They tend to be more profitable side, generally, in general, if I answer, right? The premium tends to be on the higher side. People have the capacity to pay, those who buy them. And the loss ratio tend to be fairly stable, right? On the lower side, less than 50% and all that. So that's the kind of range you're looking at generally. So, but it's a niche market, the number of sales is low. The risk is high because a single claim can distort your loss ratio.
But we don't have an indication about the volume.
From this portfolio, as of now, not. As of now, not. I can dig out, but I don't have as of now.
Thank you.
Yeah. Okay, no more questions? Then, thank you everyone for your time. Yes, sir.